The world of cryptos is ripe with opportunity but contains many bad actors who are out to take your money. If you aren't vigilant and have excessive trust in influencers, you can find yourself holding the short end of the stick. Many of the people you may believe are honest and true are in fact actively trying to take your money. In this channel, we often expose influencers for what they really are. Many retail investors have been misled to believe that crypto was created to offer them wealth and freedom. This is a naive point of view because it doesn't take into account the fact as to why such an incredible opportunity would be available to the masses and promoted by the mainstream media in such a positive light. Cryptos have the potential to make you rich, but the chances are that you will be making other people rich while being manipulated by their lies. In this video, we will expose why crypto influencers are making you poor and what you can do to flip the script. Reason 1. Influencers have a conflict of interest. There is no way that every single person that is into crypto will make it. We're all going to make it as a lie paraded by the top influencers who want you to believe the hype that they artificially create. In fact, the truth is that only a few will make it at the expense of many. The business model of a crypto exchange is simple. They require traders to make high quantities of trades in high volumes in order to generate a profit. Exchanges make money on spread, commission and capital gains. The sad reality is that 90% of all traders lose all their money and are liquidated. This consists of leveraged traders and retail investors who buy high and sell low. In fact, exchanges require these traders in order to make money. If everyone got rich from trading cryptos, the exchanges would be out of business. Their business model is quite similar to that of casinos. The moment you see an influencer promoting an affiliate link to an exchange, you can be assured that their information is tainted and they are compromised. They are pawns of the exchanges and brokers, and cannot provide legitimate information. If this was the case, they would never get corporate sponsorships from brokers. Thus, the fact that influencers have partnerships with exchanges or brokers is a key reason to never trust a single word they say. They will tell you the opposite of what is likely to happen, and that is because they have a conflict of interest. Reason 2. Influencers promote the mainstream narrative. To be an influencer, you must be looked up to and watched by the masses of retail investors who consume your content to make decisions on their investments or trades. Thus, it is evident that only influencers who promote the mainstream narrative will be at the top. The mainstream narrative consists of whatever the news, social media, and general consensus is saying. Everyone claims that they have a non-mainstream narrative and that they are the wolves while everyone else is sheep. However, they merely create a cult-like following in an anti-mainstream niche. There is no way to avoid becoming a sheep unless you think like a wolf. A wolf does not join any groups and thinks completely for themselves. Most people cannot think for themselves. They speak and act on things that they hear from other people. The extent of this brainwashing cannot be ignored. In fact, if you aren't ridiculed for your views, they are probably part of the mainstream narrative. The more you find people agreeing with what you have to say or confirming your thoughts, the more wary you must become. Reason 3. Influencers depend on TA. Influencers follow technical analysis like it is a religion until something negative happens that they say can no longer be explained by technical analysis. In their minds, TA is something that matters only when conditions are normal. Once a black swan event occurs, all bets are off and their beloved technical analysis no longer matters. If this sounds confusing, it is. The reality is that technical analysis is a tool but is not everything. Influencers create trading rules using technical analysis to tell people when to sell or buy. They say if a certain price is breached, sell everything. Other times, they encourage people to buy when the charts look bullish. TA has become another way for influencers to promote the backwards mainstream narrative and make sure people lose on trades. To become a successful trader, you must forget everything you have learned and develop intuition to know when to buy or sell. No influencer or technical analysis rule should guide your decision. If you really want to win, you can even see what rules the masses are following and counter-trade them. Because the majority of the masses lose, this gives you a considerable edge. Reason 4. Influencers create the hype train. The final reason you should never trust influencers is because they are the creators of the hype train. When influencers say that the charts look bullish, this becomes a self-fulfilling prophecy that causes more retail investors to FOMO in, which in turn increases prices and makes the charts even more bullish. When retail has left the market in fear, influencers begin to create doomsday content and change their outlandishly high price targets to unrealistically low price targets. They begin to say the market is a bear market and to not touch any cryptos. Ironically, these times are often the greatest buying opportunities. These influencers are misleading and manipulating the market to do the opposite of what is best for them. If you found this video educational, make sure to like and subscribe. I'll continue to provide you with the best information regarding the truth of the crypto markets.